Finance fam, welcome back to my channel. In today's video, I'm going to cover something pretty exciting. Stocks that people are buying right now. Things are just getting wildly interesting out there. You know how Warren Buffett does it. When people are fearful, be greedy. When people are greedy, be fearful. Remember your training. What's your training? Your training is to not be scared during times of doom and gloom. These are the times where you need to be paying close attention and buying assets that you are comfortable holding, right? So, of course, none of this in this video today is going to be financial advice. I don't know your financial situation. You may not even know your financial situation. By the way, shameless plug, if you don't know your financial situation and you want to gain more control over managing your money, be sure to check out my Wealth Master Plan training program. I will put the link in the description below. It's going to help you basically be a boss with your money all around. Investing, tax, retirement planning, all of it. Let's move over to Commonstock because I was searching for a way to kind of see what people are doing out there in these markets. And Commonstock actually has a pretty neat trending tab that shows you some of the stocks or cryptos that, or ETFs, whatever it is, that have been the most bought and sold over, a certain time period. So what I wanted to do was I actually wanted to look at the most popular assets that are being bought over the past 3 months. Sometimes it can be helpful to be able to get insights from other investors. And if you're not already set up, be sure to go to shetalksfinance.com/Commonstock and get a profile so you can start digging through all of this. The first ticker that came up as the most bought ticker over the past 3 months has been VTI. VTI is a Vanguard Total Stock Market Index Fund. So basically, we have in the VTI ETF, it's an ETF, exchange traded fund, great for passive investors. I mean, great for anybody, right? Like, it's even nice if you're an active investor, if you're a stock picker, to have something like this in the portfolio to kind of help you gain those average market returns for on part of your capital, every given year over time. So I absolutely love the strategy of having ETFs in your portfolio as a core position, as well as individual stocks. You guys know that if you've been following me for a long time. The first thing that I like to do is go to the holdings of this ETF. I want to know, what it's in. And it's going to be a total stock market ETF that's focused on domestic stocks. So this is an ETF that is going to get you exposure to the US total stock market that includes giant, large, mid, small, and some micro caps, but mostly we're looking here at the giant, large, and mid cap stocks, and it's going to have some small and micro. So it's basically diversifying you a bit more than an S&P 500 index fund would. So I like VTI. There are others that are similar. iTalk by BlackRock is actually a pretty similar ETF that's going to get you exposure to a giant, large, mid, and some small caps as well. How VTI is going to be positioned is it has over 4,000 stocks in it. Again, you're getting exposure to all of those different sized market caps versus just the S&P 500 index fund stocks. So it's more diversification, and you're going to have your same top 10s that you're going to have in pretty much every major S&P 500 index fund: Apple, Microsoft, Amazon, Google, Tesla, Berkshire Hathaway, Johnson and Johnson. These are going to be the most heavily weighted stocks in this particular ETF. So I really like that the very first asset that's being purchased on this list over the past 3 months has been VTI. I like that it's an ETF. I think that's really great, and investors should have some type of passive exposure in their portfolio somewhere. So obviously, the investors on Commonstock have their head in the right place here. The second stock that is the most purchased stock over the last 3 months is ENPH by Commonstock investors. So this is interesting. It's a solar panel company, and it's not a surprise that this would be a top stock. I imagine anything energy related, especially particularly oil, is going to be hot right now. But even renewable energy stocks, because there's this push now in Europe specifically, they are probably going to be investing a lot more heavily in the different ways that they can get energy. That includes renewable energy, which solar panels fall in that category. So no surprise here to basically see anything energy related in, the top 5 stocks that are being purchased. So the next stock on the list of the most bought in the past 3 months is TQQQ. So TQQQ is a leveraged ETF. So what that basically means is this ETF essentially is going to take whatever returns for the day that the NASDAQ, or AKA the QQQ, right? The triple Qs, any return that the NASDAQ has, it's going to be taking that return and tripling it. So you're essentially leveraging your returns on the NASDAQ. There are many ETFs like these out there, and they are typically more suited for day trading or swing trading, very short time frames, maybe days, weeks max. These typically are not good vehicles for longer term investing. What the problem is here is it says it directly on the ProShares website. Due to the compounding of the daily returns, holding periods of greater than 1 day can result in returns that are significantly different than the target return that the index has. And ProShares returns over periods other than 1 day will likely differ in amount and possibility direction from the target return for the same period. Okay, so this is really the largest problem with these leveraged ETFs or volatility ETFs, whatever you want to call them. They're really meant for short term trading and shorter term swing trading. They are not meant for long term investing. If you want to buy the dip in the NASDAQ, you can just buy QQQ. QQQ is essentially the ETF that gets you exposure to the NASDAQ index. Okay, moving on to number 4. I like number 4. Number 4 is very similar to number 1. Okay, number 1, remember, was the total US stock market index. Now, number 4 is SPY, which is giving you exposure to just the S&P 500 companies. And if we go to the holdings of the SPY, you'll see very similar holdings to the ETF VTI. That was the number 1 stock purchased in Commonstock. But the very big difference here is this is only holding 505 stocks versus the over 4,000. And it's very, very concentrated in giant, large, and mid cap, mostly giant cap and large cap, right? So this is going to hold larger companies, and it's not going to give you any exposure to small and micro cap companies. Maybe you're okay with that. Maybe you're not. That's up to you, right? But again, this is essentially going to be investing in US companies, large cap, giant cap, huge corporations, right? Our big daddy companies. That's what this is going to be investing in. And like I mentioned, this has actually 506 stocks in this particular ETF, and the other VTI had over 4,000 because it was giving you more diversification. So it just kind of depends on what you're looking for in your portfolio. I think that there are other options outside of SPY that basically give you the same exposure, but maybe for a little bit of a lower expense ratio. So for example, SPY is 9 basis points, but if you let's do IVV, which is the iShares or BlackRock version of an S&P 500 index fund, their expense ratio is 3 basis points. Okay, so that's much less. Now we're getting into the weeds here because 9 basis points versus 3 basis points, you're still under 0.1% of cost. It's still cheap, whatever, right? But just so you know, if you're putting large amounts of capital in, it could be smart of you to choose an ETF that's going to give you the same exact exposure to the S&P 500 companies, but it's going to be cheaper. And another one, just for, poops and giggles, is VOO, which is a similar expense ratio to IVV. And this one here is going to give you the exact same exposure as well. So the 3 main S&P 500 index fund ETFs that you can purchase are going to be SPY, IVV, and VOO. All right, let's see what number 5 is. What's the 5th stock? Number 5 is Square or Block, whatever you want to call it. All these companies changing their names. I'm just going to call it what I remember it as. Square. This is one that I am actually very long. I've been long Square since $9 a share. I really like this company, and I think that it still has a lot of growth levers to pull, a lot of things to be excited about for the future. Um, let's take a look. What's funny is, let's just bring this up now. The sixth stock that is the most purchased over the past 3 months is Shopify. And these are, in the same industry, right? They're both businesses that are helping e-commerce businesses come online, manage their business, market, all of the things, websites, all the things, right? So these are two fierce competitors, and it's very interesting to see that these two are being bought by investors. It's no surprise at all. These are two really great companies. I pulled up on YCharts here, basically, the four main stocks that are being purchased on Commonstock that I see on this list. So I saw Snow, I saw Roblox. Facebook is a great one too. But what I did was I just wanted to kind of pull up those four, and we can kind of compare, go through some of this data. I'm going to clean this up, and let's just look at Block and Shopify side by side. So first, starting with EV to revenue, which is a valuation metric that I use to get a quick glance at companies and kind of compare them against each other. Shopify has been trading at a higher valuation than Square. Square is a bit more mature of a company. Shopify has typically traded at a premium to Square. Shopify has been growing. Typically they both have been growing at very healthy rates. Shopify is continuing to actually grow revenues. I know that they are expecting a hit to revenues in 2022 as the world kind of slows down, and they pulled forward a lot of growth from the pandemic, but they still expect to grow, which is great. And Square, saw a really big spike in Bitcoin revenues basically throughout the pandemic, and some of that Bitcoin revenue has fallen off. If we look at the revenue growth between Block and Shopify, we are seeing the Square revenue come in a bit more, and we're seeing negative growth based on last year's quarter of this in the same period. But that's kind of to be expected because things got a little cray-cray with Bitcoin, and just things were cray-cray with stimulus checks in general. Even though Block is seeing a decline in their revenue, they actually are seeing an increase year over year for the same quarter in their gross profit. So less total net revenue, but more gross profit. So it's not all bad. The Bitcoin revenue did decline significantly, but we also have to keep in mind that they actually don't make a significant amount of their revenue from the Bitcoin revenue. You can see that you've got Bitcoin revenue of 1.7, and then we've got Bitcoin costs of 1.6. So there is a spread in there of profit that they're earning, but it's not a significant percentage of their gross profit that they generate in their business. So I would say overall, Square is absolutely still having a very healthy business, even though they're seeing revenue growth declines. So just keep that in mind. Both of these businesses are fantastic businesses. I can absolutely see why Commonstock investors are deciding to purchase them. Will they come in more? Can they come in more? Absolutely. We don't know what the future holds with recession, and these businesses are absolutely affected by recessions because they have businesses online that sells goods, right, and services to consumers. And if consumers slow down with spending money, these businesses are going to slow down too. Therefore, revenues are going to shrink. So that's something to definitely watch out for. But I personally think that Square is showing value here. I still like the business. I can't quite get myself to pull the trigger on Shopify, even though I think it's a great business. It'd be nice to get it cheaper. When I look at the two, I'm going to choose Square based on value. I think it's pretty cool to just peek in here and just see how investors are constructing their portfolio, especially in a time like now when so many stocks are down such a large percentage. It's really, a stock picker's market. It's an ETF picker's market too. It doesn't really matter right now. Everything is basically on sale. So it's good to see that the top assets being purchased are actually quality assets, and it's nothing that is a complete TikTok investor moment type of situation, if you get what I'm saying. So I did something fun just to really drive the point home that we are in a stock pickers market. This is an opportunity zone here. We are in an opportunity zone, people. Okay, so I went to YCharts and I did a stock screener showing the stocks that are in the NASDAQ 100 index and how many of them are down 40% or more. Okay. And 31 of the 102 stocks in the index are down over 40% or more. Okay. That's an astonishing number. And look at some of these names. We have seen stocks like Netflix. Netflix is down 70% year to date. That Netflix is not a fly by night company. Okay. PayPal, huge name. DocuSign, Lucid, take it or leave it on Lucid. Lucid's probably still kind of expensive. Zscaler, okay. Team, or otherwise known as Atlassian Corporation. Datadog, Meta, aka Facebook, Moderna, Work, Match Group, Nvidia. I mean, AMD. These are like great names. So Intuit. I could keep going. I could keep going. Okay, these are all solid companies that are down extraordinarily from their year-to-date highs. So this is when you need to be paying attention. What I can say, if there was a time to be looking at stocks to purchase that you've wanted to own, if there was a time to increase the quality of your portfolio with higher quality companies, if there was a time to do any of that, now is the time to be looking into doing that and pay attention over the next 6 months, give or take. That's my rant. So I hope you found this video helpful and entertaining at the same time. If so, let me know in the comments. I'll keep doing stuff like this. If you liked this video, please hit like. If you're not subscribed to my channel, please subscribe. I teach you how to be a better do-it-yourself investor and manage more than just investing, your taxes, your cash flow, all kinds of things. I am a certified financial planner and I love to help people gain more knowledge about their money. I'll see you in the next video.